Ladies and gentlemen, welcome back to the channel. In today's episode, we're going to be going over all of your Tesla stock breaking news today. Norway, they're going to vote no on Elon's compensation package. Does this matter? Probably not. Most likely it will not. There's over a 95% chance on betting markets still that Elon's package gets approved. But it is sending Tesla stock lower, down about 3.8% at the time of recording this video. So in today's video, we're going to take a look at the option activity from hedge funds, institutions, and retail investors in Tesla. We're going to go over all of your breaking news, what the Norway Wealth Fund just said about Elon's compensation package. It's very hypocritical, to say the least, and I don't think it really matters too much. But the headlines, again, are spooking some people today. Now, beyond that, the broader markets are not having a good day. Okay? I know there's a lot of people that are like, oh my gosh, it's very different. If you're invested in the headline S&P and you don't look at markets that often, you think this is a great market and we're just having a bad day today. If you're invested in AI stocks, small caps, mid caps, you're getting blown up right now. Like, if you were all in on margin, you've gotten destroyed in the last month or two. Okay? So we're going to talk about what's happening broadly in markets today. It's pretty obvious what is sending stocks lower. So hit the like button as well as subscribe to the channel. Check that link out down below in the description of today's episode. If you guys want to come join the trading community, come invest with us. We do short-term trading, but mainly we're buying and holding, okay? AI stocks, robotics, energy, biopharmas. These are going to be main themes for the next decade. We're not in a bubble. That's in my opinion, we're not in a bubble. There's way too much growth in AI. We've just started scratching the surface in AI. How is there a bubble today? There's not. Okay? And there's going to be many opportunities over the next 10 years that we want to capitalize on. And that is what we are doing. Check that link out down below if you'd like to come join us. But with that said, let's get started with your Tesla stock breaking news today. I'll start with the post that I actually made, okay? I took a screenshot of what was said on CNBC. It says, Norway's mega wealth fund to reject Elon Musk's $1 trillion Tesla pay package. Now, keep in mind, the Norway Wealth Fund owns about 1% of Tesla, a little bit more. So, is it important? Not really, but, any big investor or large investor that says no, they're not going to vote for Elon's package on a day like today when the markets are coming under pressure, it's going to put more pressure on Tesla. Okay. Now, I posted this screenshot and said, what a bunch of morons. Norway's wealth fund says, quote, while we appreciate the significant value created under Mr. Musk's visionary role, we are concerned about the total size of the award, dilution, and lack of mitigation of key person risk, consistent with our views on executive compensation. Oh, so let's not pay Elon Musk and watch our Tesla stock collapse instead. That's what they say. I said, effing incredible how, stupid people are. That makes no sense. That is very, very hypocritical. To say there's key person risk. Okay? There's key person risk in Tesla just indefinitely. That's never going away. If Elon stays at Tesla, well, great. If he ever leaves Tesla, the whole story is dead. Okay? Tesla stock, the AI story of Tesla would be done without Elon. Okay? Why? Because you're going to lose so much talent if you're Tesla. Okay? They're going to go to all the other companies if Elon leaves. Okay? And that's basically what Robin Denholm said. And if Elon stays, and God forbid something happened to him, okay, and he was no longer the CEO of Tesla, whether naturally or a freak accident or something. You know, people are crazy these days. There's risk, key person risk in that as well. It just seems like Europe really doesn't like Elon, and they're going to do whatever they can to make his life more difficult. Merit says, if Charles Schwab doesn't vote for Elon Musk's 2025 CEO Performance Award Plan, I'll move all my assets to another brokerage. My followers, many of whom who hold assets with Schwab and collectively own at least hundreds of millions in Tesla, may do the same. I can't in good conscience stay with a brokerage that votes against the CEO Performance Award Plan that is, in my view, clearly in shareholders' best interest. I join Jason DeBolt in saying that voting against the recommendations of a board that has delivered extraordinary returns is out of step with retail investors, Tesla employees, and the leadership we invested in to support. We are ready to move our shares. I hope Charles Schwab makes the right call here. The American University Kogod School of Business confirmed with their own study that Tesla made the #1 most American-made cars in 2025, with percentage of domestic content for the Tesla Model 3 long range at 75%, Model 3 Performance at 70%, Model Y long range all-wheel drive at 70%, and the Model Y Performance at 70%, Model X at 60%, Model S at 65%, and the Cybertruck at 65%. Stanley's Counterpoint Global Fund says it is voting for Elon Musk's 2025 CEO Performance Award Plan. They say, quote, under Elon Musk's leadership, Tesla has achieved incredible fundamental success and shareholder returns and has created one of the most innovative and mission-driven company cultures we have seen. With Musk, Tesla's future continues to look bright given its enormous opportunities in mobility, energy, and robotics. Counterpoint Global is voting for Tesla's proposed performance-based compensation plan for Musk. We believe that it is in Tesla's and its shareholders' best interest for Musk to have significant skin in the game as he leads the company towards its ambitious future, and that shareholders will benefit greatly under the plan if the company achieves its multiple missions under his leadership. This is like commonsensical, okay? Do you want to watch Tesla stock go down 50 to 80% if Elon walks away from the company? Or do you want to potentially make an 8-bagger or more? If Tesla hits the highest tier on its compensation package, they would be doing like 5 times more EBITDA, maybe more than that, than Nvidia does today. Nvidia is was a $5 trillion company. Do the math on that. Tesla could be far higher than $8.5 trillion if Elon's total package was to be paid out. Has appointed a country head in India. The company has hired Sharad Agarwal, who previously led Lamborghini India, to head local operations. Agarwal starts this week. In option activity today from hedge funds and institutions, it is incredibly bullish. You have 114 different trades totaling $187 million with a positive order value of 90%. 90% positive order value. Okay? That means out of every $100, $90 of that is heading into bullish option activity. Okay, that's pretty incredible. Now, as far as shorts, it looks like they're covering about 168,000 shares today in Tesla, and on a 4% down red day, right before Elon's compensation package vote in 2 days, it makes sense why you would cover on your short position. Tesla stock, may never come back to these levels ever again, outside of rare crash events. Right? So if you don't cover on your short position now, you might be sitting on that thing for a long time or taking a loss, in my personal opinion. Tesla could easily rally into the 500s, if not 600s by the end of this year, after what is still very much likely to be a yes vote for Elon's compensation. And then, hey, it might never come down into the 400s again, or the mid 400s anyways. So if you're short on Tesla right now, I think it makes a lot of sense to reduce that short position before November 6th. Okay, now let's talk about what's happening in the broader markets today. The entire market is selling off. Bitcoin as well, down about 5%. And look at some of this carnage you are starting to see in Bitcoin. Bitcoin hit an all-time high of $126,244 today. It is $101,000. Bitcoin has fallen. What is this? And I'm just picking on Bitcoin here to prove a point. Bitcoin has fallen 20%. So a lot of people that point out single stocks and say, oh, that stock sucks. You know who you are. That says, that stock sucks because the rest of the markets are doing fine. And just like completely disregard the other, whole small cap arena, AI, mid caps that have gotten absolutely crushed in the last month or two. Look at Bitcoin, down almost 20% in like the last month. So if you're feeling red in your portfolio, unless you're in Mag 7 or S&P index funds, you've come under some pressure. Don't beat yourself up. It's not just one stock versus the next stock. It is everything that has been declining. Talked about the reason for this decline in some of the prior videos. The reason for this decline is actually very simple. Wall Street is getting concerned about the government shutdown. Okay, that's what is happening today. Now, I posted this in the trading community today, this morning at 7:08 a.m. I said, this was a direct headline that came out. The Congressional Budget Office estimates that the ongoing federal government shutdown could remove $7 to $14 billion from the U.S. economy, reducing fourth quarter GDP by as much as 2% due to halted government spending. Okay. We've been talking about this for the past couple of days. And by the way, if you want to come join the trading community, that link, again, is down below in the description of this video. It's the place to be in moments like this. Okay. But we've talked about this for a while now. And there's been some pushback from some of you guys that have said, stocks don't care about the government being shut down, blah-de-da-de-da. That's not true. Okay. Especially this time around, because we are about to be in the longest government shutdown ever. We're kind of in uncharted territory. Normally, government shutdowns are pretty fast and they get resolved. But from a Wall Street perspective, we didn't head into this government shutdown with the economy doing well. From Wall Street's perspective, we don't have a lot of a cushion, right? Economically speaking, labor market was declining. Like we were having negative jobs reports, and then you slap the government shutdown on top of that, and it's making Wall Street get very nervous. You've seen the nervousness really building in markets for a while now, okay? This is what I've talked about. That's why you've seen small caps, quantum, AI, biopharmas, like anything that is remotely risky has been selling off, whereas Mag 7 has been doing very well. And there was a lot of pushback on what I said yesterday, that if we have a recession, the only place you'd really want to be is the Mag 7. Obviously, you'd rather be in cash or bonds, because bond prices are going to go up, yields are going to plummet if we go into a recession. That's obvious. But if you had to be in stocks, any stocks out there, the Mag 7 is likely to do better than everything else. Better than healthcare, I would imagine, right? Because AI is not going anywhere. Let's be honest. And Mag 7 has the most reliable, predictable, stable business models. They're not going anywhere. Okay? So people have been selling the small caps, buying Mag 7. If you're a hedge fund or institution and you think the economy is really weak right now, labor market's really weak, and now we have a government shutdown that could push us into a recession, it makes a lot of sense why Wall Street is selling small caps, selling risk on, and buying safety, right? I don't think I don't believe that. I don't think the economy is super strong right now, but I also don't think it's super weak either. I think we're largely unchanged. Now, government shutdown is a negative. It's having a negative impact. But here's the fact, and this is what Wall Street is going to miss. We don't go into recessions anymore in this country. It just really doesn't happen unless you have a massive shock event, right? Which, yes, government shutdown, some people are not getting paid. Presumably, they're going to get back pay eventually, okay? But the U.S. economy is so big and so diversified and not reliant on one industry that it's really hard to get enough industries at once to slump into a recession to give you a larger kind of broad economic recession. We've been in a rolling recession for 5 years, guys. 4 years, something like that. It was semiconductors, it was real estate, it was, and a little bit more now, it's like higher end items, okay? We've been in a rolling recession. My thought process is next year, you're going to start to see a recovery. Why? Because inflation kind of ended in a way in 2023. Like, things went really crazy in 2021 and 2022 as far as prices going up. But by about mid-2023, that rate of increase had really started to slow down. Like rent, everything had really started to slow down. So for the past 2 years now, roughly, people have slowly been able to catch back up again. And what I mean by that is when you have inflation like we did, not even looking at the government numbers, but, just everything that goes up, car insurance, for an example, that goes up $200-$300 a month or a year, whatever the number is, it takes a while for your wage to catch up and where you're actually positive on wage growth. Well, you're about 2 years later is when you start to see a recovery begin, where people can start to make more, the price of items stops, going crazy, and you can generally start to recover. It's not a very fast process, though. So if you don't understand these things, like Wall Street doesn't, a lot of these Wall Street guys don't know their left hand from their right hand, they're going to miss the consumer recovery. And at a certain point when things are presumably as bad as they are, and have been as bad as they are, the only way to go is up. From a simple, simple logic. And I think that's what we're heading into in 2026. I think partially the big beautiful bill is going to be really stimulative. No tax on tips, no tax on overtime. That's up to $25,000. No tax on overtimes, like $14,000. So if you max out on $25,000 worth of tips at a 20% tax rate, you're going to be saving $5,000 a year. Now, I know a portion of that's going to be, still going to be taxed, like state and, Social Security, Medicaid, all of that. But you're probably going to save like $2,000 in federal taxes just on that, let alone overtime. If you qualify for that as well, people are going to be getting thousands of dollars extra back on their tax return by mid-2026. But what I think is also really overlooked is real estate. Real estate's going to start to move. People, like, even if you're myself, I bought a home in 2021, okay, in March, right before prices went crazy. I got a mortgage on that home at the time for about $500. It was about a $100,000 house. I live in Michigan. Houses were dirt cheap then relative to like other states. Now, the house is worth $200,000 or more. The mortgages went up to about $800 a month. But if I wanted to buy that same house today at $200,000, it would be an over $2,000 mortgage payment. Even if like I could afford that and I can afford to buy a new house, do I really want to trade an $800 mortgage for a $2,000 mortgage and pay a higher, price? Like, I'm buying, essentially at that point, the meme stock that just went up 100%. I don't necessarily want to do that and have a mortgage that's almost 3 times as expensive, even if I can afford it. So what a lot of people have been forced to do is they're not able to buy or sell their home. People do have a lot of equity in their homes, though. So as mortgage rates come down, people can sell their home. They're going to start taking a lot of money to the bank. I've calculated hundreds of billions of dollars could be coming back to families next year alone, just in the form of home equity being converted to cash in your bank account when people sell their homes. So I don't buy into the narrative that we're heading into a recession. But I see why Wall Street is concerned by this. What we need at this point is the government to reopen. Now, if the government were to reopen tomorrow, which there are some rumors the government could reopen on Wednesday or Thursday, you might see a situation where stocks do really well. Stocks recover a lot, problem over. Or you're going to see a situation where you get a bit of a recovery, but then Wall Street wants to see how the economy is. They want to see how the data performs. And honestly, I don't know which direction we would take. Also in the news today, job openings in October slumped to the lowest level since early February, Indeed measure shows. It says employment opportunities hit their lowest level in more than 4.5 years as October came to a close and the government shutdown dragged on, according to data from job site Indeed. Indeed's dashboard of directors also has shown a decline in salary offerings as job advertisements have declined. You can see today the Dow is down 0.62%, S&P is down 1.08%, NASDAQ down 1.66%, Russell 2000 down 1.09%. The VIX is up 10.25% today, so definitely a shot of fear out there. Bond yields are down about 2%, or 2 basis points. You're not getting an outright collapsing of 10-year bonds, okay? So it's not like we're in full-blown panic recession mode. But Wall Street is definitely pricing in a growing chance of a recession as the government is shut down. So it's definitely not too far gone for this market, but we do want to see the government reopen as soon as possible. Seeing another liquidation in gold and silver. Gold and silver down about 1.5%, and especially, again, cryptos. Cryptos just getting obliterated. Bitcoin down 5.5%, Ethereum down over 6.5%. Oh, and I guess it also doesn't help that Michael Burry, the big short investor, he placed shorts essentially against Palantir and Nvidia. Alex Karp blast the big short investor Michael Burry as batshit crazy for bets against Palantir and Nvidia. That is a pretty damn crazy move. Now, Michael Burry, he did really well during the crash of 2008, the global financial crisis. Ever since then, Burry is not the investor that a lot of people think he is. He's really bad at trying to predict what is coming next or predict a bubble or anything like that. Like there's no recent examples of Burry being correct on really anything. Not to mention, Scott Bessent says the U.S. has lots of options to use on tariffs if it loses Supreme Court case. So, they're just doubling down on tariffs. And now you can see Transportation Secretary Duffy warns U.S. DOT may need to close some airspace if the government shutdown continues. Like, from a Wall Street perspective, it looks like this thing is falling apart. The house of cards is collapsing. And no signs of ending in the government anytime soon. But I personally think when you're starting to shut down or threaten to shut down air travel, basically traveling in general, there's a lot of pressure being put on Congress right now. And even stocks selling off mixed with that lack of transportation, they're going to have to just compromise on one side or the other. U.S. House Speaker Johnson says if the Senate passes something, the House will come back. U.S. House Speaker Johnson says we will not do a December continuing resolution. And he says that putting a continuing resolution into January makes sense. So yeah, it is a bit of a shit show sandwich out there today in markets. There's a lot of moving pieces that, really, you got to get the government open and funded, like to even start any kind of a recovery here. But I'm in Aruba right now. Look at these. I collect money anywhere I go. So that's a 10. Arubian TN Florin, I think is how you say that. That one's pretty cool. This one's 25. And 50. I guess it's like 50 cents on the dollar versus American money. I believe this was like $50 US dollars. Maybe I got ripped off. I don't know. I don't even really care because I collect it. But yeah, it's a shit show sandwich. Okay, I've been warning about this. We've been talking about this. You're starting to see it. Okay, I was early as always. Okay, I was just early to spot it, early to call out what the markets were freaking out about. But now it's seeming to impact most things. Now, there are some good signs, potentially, like in small caps, for an example. The IWM, you can see this purple line here. A lot of the time you tend to bounce around the 50-day moving average. Like you get to the 50-day moving average, you get a bounce. The problem would be if we fall below the 50-day moving average, you tend to fall quite a bit more, okay? Which would not be good. So, like, even you can see ever since April, we got above the 50-day moving average again. That really served as support this whole rally. Well, now we broke below that today. Looks like we might actually close above the 50-day moving average. But if the pain continues, you're going to be targeting the 100-day moving average. And that's where things start to get a lot uglier, considering under the surface, a lot of this market is already trashed. Like, trashed. It's terrible. Okay. I do think it presents an opportunity to buy the dip. If you haven't done so already, I think we're closer than not to the end of this. I think just, again, threatening to shut down air travel is a big no-no. Big no-no from a political standpoint. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode to come join the trading community if you have not done so already. Have a great rest of your day, and I will see you in the next one.